Good morning everyone, welcome to the official tip channel of Officer Study 24/7. As you all know, we have a 50 days 50 classes series in which we are discussing every day the one single topic of your Indian economy, Indian financial system at 7:30 a.m. only on Officer Study 24/7. The same we are doing in the same channel, on the same channel at 7 a.m. for PPB, Principles and Practices of Banking. So do remember, Monday to Friday you have to join the session at 7 a.m. and 7:30 a.m. for PPB and IFS respectively. On Saturday you will find the weekly revision session, and on Sunday you will find the special session. So do not forget to join these session only on Offices at 24/7. And if you want to join the session, do subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you. Okay, so let's start the session. In this particular session we are going to discuss IFS particular module B chapter. So as you know, 45 units are there in module in overall your Indian economy, Indian financial system. Out of that, if I talk about 11 units were there in the module A, till 19 we have module B. So today we are going to cover the 19th unit. It means today we will be ending the unit 19. It means module B of your IFS. Okay, so before starting to the chapter, first of all, I am your mentor Amanjot Kaur for Indian economy, Indian financial system as well as for PPB. And now I want to let you know first that what actually the union budget is. As you can see, the 19th unit is about your union budget. So what actually the union budget is, let's discuss that first and then we will discuss the questions. Okay, so the union budget, if I talk about, is also you can call that fiscal policy. So the fiscal policy every year presented with the union budget of Government of India. Okay, so first of all, union budget earlier what used to happen, first of all, it is prepared by Ministry of Finance, it is presented by Finance Minister, it is presented on 1st Feb, that is the first working day of 1st Feb of the first working day of Feb or the 1st Feb, then at 11 a.m. it will be presented. This is the basics of your budget. Now how this has been started, earlier we used to have what? In India there was the general budget that used to be introduced by Britishers. So Britishers introduced the general budget in India in 1869. So the first budget of India was introduced in the year 1869. Then this general budget was divided into two parts. The first part was rail budget that used to presented by the Ministry of Railway Minister, and the second budget was union budget that used to presented by the Finance Minister, or it used to prepared by the Ministry of Finance. Then what happened? Then again in 2017-18 it is converted into general budget. Okay, so from 2017-18 we again have merged the budget and we are presenting general budget only. And since then this general budget prepared by Ministry of Finance, presented by Finance Minister, presented on 1st February and presented at 11 a.m. One day before of this budget day we present the economic survey. Economic survey is simply the survey of the economy which let you know that what is the position of your economy, that is known as economic survey, right? So here we are talking about economic survey. It is presented one day before union budget, one day before union budget. Okay, now I have discussed what is union budget, when it will be prepared, certain points I have given to you. Now one more important thing, in our constitution they haven't used the word budget. In the article 112 they have used the term that is annual financial statement. They have introduced the term annual financial statement. So the annual financial statement is defined under our constitution in the article 112. It is the budget have not been defined in any particular term, that is the budget was also talked as the annual financial statement. Okay, and what this annual financial statement actually is, this annual financial statement is the statement of income and expenditure of Government of India. It is the income and expenditure of Government of India. And also remember, whenever Government of India presents the budget, it always gives you the estimate budget. It always gives you what? Estimate budget. Because whenever government is presenting budget, that budget will be presented for the upcoming financial year, not for the current financial year. You are estimating for the upcoming financial year. That is your budget, है ना? That's the estimated budget. Estimated budget. And in the end of the financial year, you do what? You revise this budget just to check whatever planning you have done, it was success or not. So in the end of the financial year, we do what? We revise the budget. Okay. Now apart from that, if we talk about budget, the sources of income for Government of India are of almost 4 types. First, government earn money from tax. Government earn money from non-tax services. Tax means direct tax, indirect tax, both will be covered. In non-tax, government will cover your taxes, not taxes, fine, penalty, challan, etc. will be covered in the non-tax. Then we have a debt receipts. It means the government have given a loan to someone, to some country, and government is charging interest on that. Then we have non-debt receipts. Now non-debt receipts simply means what? It simply means you are taking back, you are doing investment. On investment, you are taking back the profits. That's the non-debt receipts. These are the sources of income for Government of India, and the expenditure for Government of India are of 2 parts, or they have divided into 2 parts. That is scheme expenditure and non-scheme expenditure. So there are certain expenditures in the country which are already planned. We have to establish schools or hospitals, dams or something else. Let's say, so this is already planned. We have to give LPG connection to 1 crore BPL family in the country. This is already planned. So this is the scheme expenditure. Non-scheme expenditure which can happen suddenly, like the uncertain situation, natural calamities, etc. So that will be the part of your expenditure. Okay. So this is what the budget is. I have given you the overview. Now let's start with the questions and discuss in the form of question with the explanation. But in the end of the session, I will be asking you all how many answers you have given correct. So be very precise about your answers so that you will let me know in the end of the session how many answers you have given correct. Now fiscal deficit refers to dash. What does fiscal deficit refers to? So if I talk about deficit, deficit means loss. When the expenditure of Government of India is more than the income, this is known as deficit. So we have certain options here. The first we have the difference between government's total expenditure and its total receipts, including borrowing. Second, the difference between government's total expenditure is total receipts, excluding borrowing. Third, the difference between government's tax collection and salary payment. The difference between government's tax collection and government's borrowing. So what do you think, which of the following is the fiscal deficit? Which of the following is the fiscal deficit? Let me know which of the following is correct. A, B, C or D. Okay, so the deficit means loss, and whenever the loss happens, the expenditure of Government of India will be more than the income. That's the loss. Hana, that's the deficit. So fiscal deficit happens after the budget has been gone to the loss, when the budgetary deficit is there. What is budgetary deficit? The overall budget of the Government of India is in the loss. The overall budget means the expenditure is more than the income. That is known as your budgetary deficit. Okay. So here when we talk about fiscal deficit, it will be the difference between government's total expenditure and total receipts, and that you have to exclude the borrowing. So whatever loss happened, the total expenditure was more than the total revenue. After that, government has borrowed the money, so that will create your fiscal deficit. The right answer will be B option. Right answer is what? B option. This is fiscal deficit. Now there are 5 types of deficit in the budget. Okay. Now, which of the following is the definition of budget deficit, or you can call it a budgetary deficit. Budgetary deficit or budget deficit, both are same. So you have these options. First, excess total expenditure over total receipts minus interest payments and borrowings. when your total expenditure is more than your total receipts and you are subtracting the payments and borrowing. Second, excess of total expenditure over the total receipts minus borrowing, okay. Excess of revenue expenditure over the revenue receipts, okay. Excess of total expenditure over the total receipts. So what we're talking about, budget deficit, it means the overall budget of the government went to the loss. And when the overall budget went to the loss, it means total expenditure is more than the total income. So right answer will be D option. The excess of the total expenditure over the total receipts will be the right answer. So right answer is D. Okay. Next, revenue deficit is calculated as. Revenue deficit is calculated as. So I will tell you, you can answer here. I will give you the understanding of revenue deficit means what. Actually, budget have its two components. The first one is revenue budget. The revenue budget is the short-term budget of the government of India, which talks about daily income and expenditure. Then we have second component, capital budget. Capital budget is a long-term budget which talks about the long-term income expenditure of government of India. Now revenue receipts. Revenue budget covers your revenue receipts. It means the income that government of India is earning on the day-to-day basis, and the revenue expenditure, that means simply your expenditure that government of India is doing on the day-to-day basis, like the salaries or payment, whatever. Now similarly, the capital budget will have capital receipts and the capital expenditure. So when the overall budget went to the loss, when the overall budget went to the loss, you can say revenue expenditure plus capital expenditure minus revenue receipts plus capital receipts. It means both the expenditures in revenue and capital are more than the income of revenue and capital. So it is what, whenever you calculate the overall budget expenditure or income, you have to cover revenue and capital budget. Right, this is what I am trying to say. If I am calculating the overall expenditure of the government of India, I will calculate capital expenditure plus revenue expenditure. I want to calculate the overall income of government of India, I will write like revenue receipts plus capital receipts, because budget have these two components. Now what will be revenue deficit? The question is asking about revenue deficit. So when this revenue expenditure is more than revenue receipt, that's the revenue deficit. So right answer will be your C option. Okay, right answer will be your C option. Clear? Next. Net tax revenue. So tax revenue is simply the earning that government of India does with the taxes. There are two types of taxes, direct and indirect. Why we call direct tax as a direct or why we call indirect tax as an indirect tax? Because direct taxes are those taxes whose burden cannot be shifted. Let's say for example, I am the customer, I am the public. So I have a liability to pay the taxes to the government because government is providing me all the services I am using in the country. I am using road, I am using metro, I am using let's say public transport, whatever I am using, that is here because of the government. So I have a certain liability towards government. I have to pay that amount to the government in the form of taxes. And the taxes are of two types, direct and indirect. So direct tax is what? It's a type of tax in which you will find, what can I say? You cannot shift your liability on the third party. Let's say I'm earning a certain amount of money. I'm having my own income. So the company is deducting TDS, that is tax deducted at source, every month from my salary, and that other 24/7 pays that to the government of India. Now I am saying to the company, do not cut my taxes from my salary, give me my whole salary. My taxes will be paid by my brother. Can I say that? No, because direct tax is the liability of you, the person who is earning the money. You cannot shift your liability, you cannot shift your burden on the another party. So direct taxes are those taxes whose burden cannot be shifted on the third party. But the indirect taxes, burden can be shifted on the third party, like in the GST. Okay, so which of the following is correct in case of net tax revenue? Tax revenue we are calculating here. So whatever the gross tax revenue was minus national calamity contingent duty transfer to NCCF minus state share. So this is the right option. The first option is correct here. Q, because the gross tax, whatever the gross tax revenue was there, out of that you have deducted the value which you have to pay because of the national calamity. You also have deducted the value that the share you have to send to the state government. So after deducting all the expenditure that you have done out of your gross income from the taxes, that will be your net tax revenue. Here you are adding the tax share. Why you will add the tax here? You are paying taxes to the state government. You are not taking taxes from the tax here. You are paying taxes to the state government. You are not taking taxes from the government, state governments. That's why this won't be right. Here you are adding the expenditure of national calamity. How you can add? This is your expenditure. This is your not income. Tax revenue is the income of the government. This is your expenditure. It cannot be right. The fourth one, again, it is adding the national calamity expenditure. That's why the right answer will be A option. Okay, right answer is A. Next question. Net fiscal deficit is the difference between. Now, fiscal deficit we have seen after the budget went to the laws, whatever the borrowing of the government, that will be known as fiscal deficit. So, it is the difference between what? Gross fiscal deficit minus net interest payment. Gross fiscal deficit and interest payment, gross fiscal deficit and net lending, none of the above. So it's very obvious, net lending remained, you have taken the remain lending you are and talking about gross fiscal deficit. So when you subtract the net lending from the gross fiscal deficit, you will get the net value of fiscal deficit. Because we have discussed now, fiscal deficit is what? Total expenditure of government minus total income of the government excluding borrowing. So you have excluded the borrowings here. And that's why it's a difference. Clear? So right answer will be C option. Right answer is C option. Next. Total receipts in the central government budget. Receipts means the income of the government. So from where the government of India is earning income, that you have to tell here. The total receipts of the central government. So we have these four options. First, revenue receipts plus capital receipts plus fiscal deficit. It can't be true. Revenue receipts, capital receipts plus drawdown. It can be true. It can be true because you have revenue receipts, capital receipts. Revenue, capital, again deficit. Deficit is not your receipt. Total receipts means we are finding out the income of the government of India. Deficit is not an income of the government. That's why first and third will be wrong. And also the fourth one will be also wrong because it is including deficit. So the total earning of the government is revenue receipts plus the capital receipt plus the drawdown of cash balance. Whatever cash balance was there, that is also the income of government of India, right? That's why it is the right option. So right option will be your B option. Clear? Next question. Net fiscal deficit is calculated as. So that's what we have discussed till now in this particular session only. So which of the following is the correct calculation? The formula it is asking. Gross fiscal deficit plus net lending, you can't plus, you have to calculate net value. Net means remained value you have to calculate. So gross minus net lending, is it true? Yes, it is true. We have just discussed in the form of difference. The difference between the two is known as net fiscal deficit. So simply gross fiscal deficit minus net lending will be the right option. Okay, right answer will be B. Now, expand NCCD. Which of the following is the full form of NCCD? 1 second. Okay, this is the NCCD. First is saying National Council on Crime and Delinquency, National Council on Credit and Debentures, National Council on Commercial and Deregulation. No. The right answer is National Council on Crime and Delinquency. So right answer will be your A option. So a 0.5 mark question can be asked in the paper. I will tell you 0.5, 1 and 2. This is the distribution of your mark. In 0.5 you will find what? In 0.5 questions, you will find like one-liner questions. You will find, let's say, for example, abbreviations. Okay, abbreviations full form can be asked. You can find like the questions of your true false type can be asked. One-liner true or false statement was. One-liner you can find fill in the blank. In 2-marker question, you will find case study questions can be there. Statement based question can be there. Okay, so these are the pattern of question you can see that will be available in your paper. So accordingly the abbreviations will be also important. Whatever abbreviation you find out, do make sure you read that. So here the question is asking pick odd one out. The different one out of these 4 options. Out of these 4 options, which of the following is a different one that you have to tell? The loans to public enterprises, pension, subsidiaries, police. So you can see in the budget we talk about loan given to the public enterprises, pension, that is the expenditure of government, subsidies also the financial assistance government is providing to the social welfare of the country. Police is not a part of like a budget or union budget of the country, so the right answer will be D. This is the odd one out. This is what? This is the odd one out. Next question, again the pick the odd one out. Achha, the pick odd one out will be also your 0.5 mark question. This pattern of question can be seen in the 0.5 mark question. Okay. So now these are the 4 options you have. First, custom, service, interest or income. Which of the following is your odd one out? See, all are the form of income. Custom duty, government's income. Service tax, government's income. Income tax, government's income. Interest receipts is also a government's income, but the difference is it's a non-tax revenue. It's what? It's a non-tax revenue, and the A, B and D all are what? They are tax revenue. So the right answer will be here your C option, because it's the only option that is the income of government but from the source non-tax revenue. So that's why C option will be there. Okay, pick odd one out will be C option. Now this is how we discuss the union budget, the 19th unit of your Indian economy, Indian financial system, module B. So as you can know that we have total 19 units in the module B we have completed. So module A and B covered. From the next class we will be covering the module C, a very important module. C and D module have more weightage in the paper in comparison to A and B. So do very precise about it. Be careful while you are studying, because conceptual clarity is very important, not in only C and D but also in the A and B. So do make sure you revise it properly. Okay, and before that let me know how many questions you have answered correct. Also, if you are watching recording session, do make sure after completing the recording you drop a message in the comment section and let me know how many answers you have given correct. Okay, so now if you want a complete discussion of the union budget, because in the union budget a lot of things are there that you have to cover, I will tell you here. First of all, you have to understand the basics of the union budget, like the definitions and all. You have to cover that. Then you have to cover the types of budget. There are 2 types of budget, that is balanced budget and unbalanced budget. The unbalanced budget further divided into 2 categories, surplus and deficit. Then you have to study the components of budget. The components of budget are 2 that I have told you, revenue budget and a capital budget. Then you have to cover types of deficit and effective revenue deficit, fiscal deficit and primary deficit. These 5 types of deficits are there. Then you have to cover the certain terms related to the budget, like what is a finance bill, vote on account, money bill, etc. What is annual financial statement. Then a certain budget allocation you have to cover. Budget allocation, because budget is presented every year by the government of India. Every year government presents the budget. In that situation, budget allocation is also important. So these all you have to cover. And to cover all these, you can go to the Mahapack 2.0. But to go to the Mahapack 2.0, you have to download the 24/7 application. So first, download the application. One more benefit is there, because of the application, you will find here the discount of how much? Additional 1%. Additional 1% discount will be available for all of you if you go with the application. So do download the application first, then go to the Adda 24/7 application. When you go to the application, you will find a front page where JAIIB, CIB section will be different. You will find the JAIIB, CIB section. Click on the section, then go to the JAIIB October 2023, and simply you can find there is an offer going on in Mahapack 2.0, that is double validity plus 81% discount. So batches are also available if you want to enroll in a particular batch. Otherwise, you can go with the Mahapack 2.0. First, check the offerings of the product. So these are the offerings of the product. You will find here the live classes, e-books, test series, video recordings, etc. Test series will be topic wise as well as full length. Mini marathon, Maha marathon, everything will be available here for all of you, right? Everything will be available. And after that, you will find the validity here. You can see 6 plus 6, 12 plus 12 and 3 months. So now there are so many bankers who says, why I would purchase 12 months validity? Why I would need 2 years validity? Because I will be clearing the paper in the October 2023 only. If you have this kind of target in your mind, that's why we have introduced the 3 months validity Mahapack also. So you can enroll accordingly whatever duration you want, and after that just use the code that is right now Moon80. After using the code Moon80, you will get 80% discount. But if you want 1% additional discount, use the coins that is available on your application and you will find minus 1% discount on this amount. It means 1% more discount will be available. So this is how you can enroll in the Maha Pack. You can enroll in the your individual batch also, but do make sure you select the validity from here, 6 plus 6, 12 plus 12, 3 plus 1, because accordingly price will differ. Okay, and if you find any kind of doubt or any kind of issue at the time of enrollment, like code is not working or something else, you can contact on this number also. You will get the query resolved here. Okay, so this is all for enrollment process. And as I have told you, today we have completed modules B. From tomorrow we will be starting the module C. And tomorrow at what time? Every day, Monday to Friday, we meet at 7 a.m. for PPB, at 7:30 a.m. for Indian economy, Indian financial system. On Saturday, you will have weekly revision sessions of 7, so that all the upcoming sessions, you will know that these are the session that is going to come in a particular day. And if you want to be notified about the session, just click on the bell icon also, so that Good morning everyone, welcome to the official YouTube channel of Officers at 24/7. How are you all? So as you know, we are running 50 days 50 classes. That is very important for you to prepare for the JAIIB October paper. But apart from that, these are not the only session that will be helping you out for your preparation. These session will be running from Monday to Friday, but on Saturday and Sunday you will have a special session. And for all these things, to attend all these sessions where you have to go, I will let you know in the end of the session. So let's start the session without wasting more time. First of all, a very good morning to all of you. Welcome to the channel. Those who are new here, do make sure you subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you. And also this 50 days 50 classes we are running from Monday to Friday. In the morning 7:30 a.m. for Indian economy, Indian financial system, and at 7 a.m. for PPB, principles and practices of banking. And I'm your mentor Amanjot Kaur for both the subjects PPB and IFS. So let's start the session. As you know, every day we are discussing one particular topic regarding your paper, and we are discussing that topic in the form of MCQ plus explanation of that particular question. So let's start the discussion. So as you know, there are 45 units in your Indian economy, Indian financial system subject. Out of these 45 units, 19 units are there in the module A and B that we have completed. Now next we have module C, and in module C 21, 22, 21, 22 we have already discussed. Now today we are going to discuss 23rd unit, that is the development financial institution. Now what is actually development financial institution? What is DFI? What is development financial institution? Let's understand a particular basic of this particular term or particular institution. Then we will be moving forward to the MCQ. Okay. So if I talk about development financial institution, they are the types of institution which actually help in economy to fulfill the objective of financial system. Now, what is the objective of financial system? To simply exchange the funds among the persons who have surplus of money and the persons who have deficit of money. So to exchange this fund, financial system is working, and to make this possible, we have a financial institution. And the financial institutions are divided into two categories, that is banking institution and non-banking financial institution. So if we talk about financial institution, first you should know that whenever we talk about financial system, what does financial system means? Financial system simply means when you want to exchange the fund from the persons who have surplus money towards the persons who have deficit of money. Deficit of money. This exchange of funds is actually your financial system. And to perform this activity, we need the financial institution. To perform this activity, we need financial institution. One second. We need what? We need financial institutions. And how many types of financial institutions are there in the country? There are two types of financial institution we have. The first one is banking institution. The first one is banking institution. And the second one is non-banking financial institution. When it comes to the banking institution, under the banking institution, you will have RBI, and RBI will dividing these banking institution into two categories, that is the scheduled bank and the non-scheduled banks. Okay, these are the banking institution in our country. Further, they will be divided into commercial, non-commercial, etc. Now, if I talk about NBFI, these are the non-banking financial institutions. Now, non-banking financial institutions are categorized into three categories. That will be all India financial institution. Second, we have non-banking financial companies. Third, we have primary dealers. So, these are the non-banking financial institutions. Okay, so they all are working for the same objective, to exchange the fund among the persons who have surplus money and the persons who have deficit of money, right? Now, if I talk about where the development financial institution fit in this particular criteria, so development financial institutions comes under the all India financial institution. Okay, so all the DFIs will come under the AIFI, that will be helping us to develop the particular sector by providing the funding by focusing on a particular sector. Now, what about particular sector means? First of all, we have IFCI, we have SIDBI, we have Exim Bank. Apart from that, we have NABARD, we have NHB. So these are the development financial institution which we have right now, and they all are working for the different sectors, right? They all are working for different sector, like IFCI working for big industries, SIDBI working for small industries, Exim Bank working for the export import of the country, NABARD is working for the agriculture and rural development, and NHB is working for the housing sector, because they have been defined like this: Industrial Finance Corporation of India, Small Industries Development Bank of India, Export Import Bank. NABARD is National Bank for Agriculture and Rural Development, and National Housing Bank. Okay, so these are the development financial institution. This is the first development financial institution established in 1948. Clear? Now, if I talk about the latest one is established in 2021, and that is known as NABFID. Now, what does NABFID works for? It works for to provide the finance for infrastructure development. National Bank for Financing Infrastructure Development. This is the NABFID. It started or introduced in 2021. This is the latest one. It was established with the capital of 1 lakh crore by Government of India. This is the latest one, and that's what the first one. Apart from that, ICICI Bank also started as a development financial institution. IDBI also started as a development financial institution. They have been converted to what? They have been converted to your commercial banking. So these are the development financial institution, and the basic we have discussed. Now let's move to the questions. And if you have any doubt now, you can ask in the comment section. I will be checking your comment and answering there. So let's start the first question you have. Do make sure you are counting how many questions you are answering correct, so that in the end of the session you will be able to let me know how many answers you have given correct. So the first question in front of you is this, that is talking about which of the following development financial institution had a role of counseling NRIs for their investment in India. NRIs are non-resident Indians. Non-resident Indians simply means the person or the citizen of India who are living outside the country for 182 days or more than that days. This is the NRI, non-resident Indians. Clear? Now, if I talk about development financial institution, this is simply the kind of institution that is providing counseling to the NRIs to invest in India. Now, which of the following is it? Is it IFCI, IDBI, ICICI or Exim Bank? If I talk about Exim Bank, it mainly works for export-import. So, it will not be counseling for the investment of NRIs. Second, IDBI, Industrial Development Bank of India. This used to be the development financial institution. Now, it is the commercial bank. In 2005, it was converted by RBI. IFCI works for the big industries. Now, the only bank that is working as a universal bank, not only bank working as a universal banking, but the bank who is counseling the NRIs for the investment in country, that is ICICI Bank. So ICICI Bank actually introduced the universal banking concept in our country after the development financial institution. So what used to happen now, development financial institution was mainly working for the development of a particular sector, like we have seen already. NHB working for housing, NABARD working for ARD, etc. So this used to happen. This have been done by the ICICI Bank also. But after a while, it has introduced, after the liberalization, I can say liberalization means to ease out the rules, regulations or restrictions from the particular thing. So that after the liberalization 1991, ICICI Bank have introduced the more liberal way of working in the banking sector. That was the universal banking. And it means what? Under a single roof, you will be getting all kinds of services like deposit, withdrawal, lending, check clearance, demand draft, locker facility, your demat account, your mutual fund, everything is available under a single roof of a bank. That is known as universal banking. So here the right answer will be ICICI Bank. Option number C will be correct. Okay. Second question is asking about how much was the initial capital of IFCI. Do remember, this was the first development financial institution established in 1948. Okay. Now the initial capital was what? 10 crore, 25 crore, 50 crores or 100 crores. And the right answer here will be 10 crores. IFCI was established with the 10 crore initial capital, and this was the first development finance institution. The latest development financial institution is NAFID, and it was started with the 1 lakh crore initial capital. Do remember the latest one also. So right answer is A option. Okay. Now next question we have here. With the onset of liberalization, what structure was adopted by development finance institution? With the onset of liberalization, what structure was adopted by development financial institution? And you have these options: commercial banks, universal bank, mortgage banks, collateralized bank. So liberalization means to ease out the regulations, the restrictions, the rules, etc. That's what the liberalization is. Okay, so now this is the liberalization. We wanted to ease out the restrictions. Hana, we have eased out the restriction. So after that, I have just told you ICICI Bank introduced the commercial bank structure. Okay, it was the commercial bank structure that was introduced by ICICI Bank. So right answer will be your B option, that is a universal bank. Next question is talking about which of the following would come under the category of investing institution. So development financial institutions are those institutions which are putting their money in development of a particular sector of the country. Now we are talking about investing institution. So these are the options in front of you: LIC, ICICI Bank, Exim Bank or NABARD. What do you think, which of the following is correct? A, B, C or D. So NABARD is development financial institution, Exim Bank is development financial institution, ICICI is a universal bank, investing institution is LIC, Life Insurance Corporation. So right answer will be your A, that is LIC will be the right option. Okay, so right answer will be what? LIC, option number A. Next question is talking about which was the first development finance institution was set up in India. That I have already told you. So out of IDBI, SIDBI, ICICI Bank or IFCI, which of the following bank is the first development financial institution? So IDBI was established in 1964. It used to be the development financial institution. It was converted in 2005 into the commercial bank, and it used to be the public sector bank, but now it is a private sector bank. Okay, from 2005 it used to be public sector, but what happened in 2019? It was purchased by LIC, so it became private sector bank. Okay, and the first development financial institution was IFCI. Okay, so right answer will be D option. Right answer is D. Next question is talking about which of the following is not a function of SIDBI. So SIDBI is a Small Industries Development Bank of India, which works for the development of small industries. It also manages, regulate and supervise the micro, small, medium enterprises. Okay. So there are certain statements in front of you. You have 5 statements. Out of that, you have to tell which of the following is not a function of SIDBI. First, it provides direct and indirect finance to MSME sector. Okay. Second, it refinances loans that are extended by the primary lending institution like banks to the MSME units. Third, it discounts and rediscount bills. Fourth, it also helps in expanding marketing channel for the products of MSME sector, both in the domestic as well as international market. Fifth, it offers services like factoring, leasing, etc. to the industrial concern in the MSME sector. So it's very obvious it provides direct indirect finance to MSME, true. Second, it also provides refinance loan to the MSME units, true. It provides discount and rediscount bills, correct. It also helps to expand your marketing channels for the purchase of your MSME sector. This is also true. It provides factoring, leasing, both are true. So that means all are the functions of SIDB. So the right answer will be none of the above, because all are the function. What is it? All are the functions of SIDB. None of them is wrong. All are the functions of SIDB. So the right answer will be your none. Okay, D option will be your right answer. Next question is talking about which of the following is correct definition of micro lending development. The correct definition of micro lending development, and you have these four statements. First is saying it is to create an institution and provide micro financial services to the people who are economically weak. Second, it is to create the institution, provide micro financial services to the people who are financially stable. Both are correct, none of the above. Achha, when we talk about micro lending development, I also get two words in my mind like microfinance and microcredit. So what is microfinance and microcredit? Both are same or different? If I talk about microfinance, finance means related to money and credit means loan, borrowing. So whenever you talk about microcredit, it means it provides you small loans. But when you talk about microfinance, it means a small savings, a small loan, a small investment, a small pension funds, a small insurance scheme, all will be covered there. So finance will cover everything related to money, but at a small level of services. But microcredit is only providing loan, but at the small level, so small amount of loan. So this is the difference between microfinance and microcredit. And here we are talking about micro lending development. So why micro lending development are providing a services that will provide loan to the people, that will provide finance services to the people? Not to the financially stable person, because they do not need such kind of help, but the economically weaker person or weaker society or the disadvantaged population will definitely need this kind of service. So the right answer will be A option. Right answer is A option. Next. Which of the following are the objective of development finance institution? So we have options here. 5 statements are there. First is saying to serve as an agent of development in various sectors like industry, agriculture, international trade. Second, to accelerate the growth of economy. Third, to allocate the resource to high priority area. To foster rapid industrialization, particularly in the private sector, so as to provide employment opportunity as well as higher production. That is also true. Next, to foster public-private partnership. So these are the 5 statements. Out of this, you have to tell which of the following are or is the objective of development financial institution. So to serve agent of development in various sectors, this is true. They help actually to develop industries, agriculture, international trade. For international trade, we have Exim Bank. For agriculture, we have NABARD. For industries, we have SIDB and IFCI. It actually accelerates the growth of the country. This is also true. They allocate resources to the priority areas. They foster rapid industrialization. That is also true. They foster public-private partnership. That is also true. So all are true in context to your objectives of development financial institution. So the right answer will be D option. Okay, right answer will be your all of the above. Next, D option. Next question is talking about which of the following is our development finance institution. So out of these options, what do you think which of the following is a development financial institution? So we have SIDB, IFCI, SEBI, NAFID and all. Which of the following is correct? Achha, there's a little bit mistake in the question. 1 second, let me update this. So the question, let's say, is which of the following is not the development financial institution? Not the development financial institution. So you know SIDB is development financial institution, IFCI is, NAFID is, but not the SEBI. So right answer will be SEBI. Okay, right answer will be SEBI. SEBI is not a development finance institution. So right answer will be your SEBI. Okay. Now next National Bank for Financing Infrastructure and Development, that is the NAFID. It is regulated and supervised by which of the following? So we know that this is the latest one, development financial institution. So it is regulated and supervised by whom? RBI, SEBI, AIFI or PFRD. So you know RBI regulates the banking system, SEBI regulates the investment market, PFRD regulates the pension fund. So all India financial institutions will be there to regulate the NABARD or supervise, sorry, not the NABARD but the NAFID. Okay, right answer will be C option. And this is the latest one, established in 2021, and the initial capital was 1 lakh crore. Next. So this is the question. These are the questions we have discussed about your development financial institution, unit number 23 of module C of IFS, right? So this is how you can cover the questions here. But before that, I will let you know, first of all, you let me know how many answers you have given correct. Apart from that, one more important thing, Monday to Friday, you will find these kind of session. Monday to Friday at 7:30 a.m. you will find IFS class. On Saturday, you will find your weekly revision class. Okay, and on Sunday, you will have a special session. And all these will be available only on Officer Sarah 24/7 YouTube channel. And for that, you have to subscribe the channel first. Okay, but these are the sessions that will help you to practice the question, that will help you to revise or memorize your concept about a particular topic. They are not going to cover everything or every detail about your syllabus. So where to go and find a detailed explanation of all the chapter? For that, first of all, you have to download the application, because here you will get 1% additional discount. And after you download, now you will find such kind of interface on the application, and you will find JAIIB, CIB here, so you can click on that and purchase your batch. So how to enroll? First of all, do download the application. After downloading the application, just go to the JAIIB CIB section. Hana, what you have to do, just go to the JAIIB CIB section. 1 second. So this is your website. I am showing you on website. You can simply go and check on what? On the application, because it will give you 1% additional discount. Okay, something is wrong right now. So I will let you know what you have to do. First, you have to go to the application, then go to the JAIIB CIB section. Okay, you go to the JAIIB CIB section, then go. You have JAIIB October 2023 tab. You will have what? You will have JAIIB October 2023 tab. Click on this. You will find all the batches detail. Apart from batches, you will also find Mahapack 2.0, and Mahapack 2.0 will cover everything, your live classes, your ebooks, your test series. Apart from that, you will get here the topic wise test series, a full length test series, mini marathon, Maha marathon, everything will be available in the Mahapack. Apart from marathon, everything will be available in the batches. So you can go and visit that, and you can use the code that is KANA80. As you know, we are going to celebrate the Janmashtami festival. So right now the code is KANA80. You will get 80% discount here. But if you use the coins which are available on your application, you will get additional 1% discount. So total 81% discount will be available for all of you by using the application coins. Okay, and the code will be KANA80. And how to enroll, I have already explained you. So this is how you can enroll yourself. And if you find any kind of doubt at the time of enrolling, you will find the contact number on the same page where you are visiting the batch. Click on that particular number, call on that number. They will definitely going to help you if you find any kind of problem, right? So this is all for our session today. And every day, Monday to Friday, we are going to meet at 7 a.m. for PPB, 7:30 a.m. for Indian economy and financial system. So do not forget to join these sessions. Okay. Apart from that, do not forget to share the session. And if you have any doubt, you can ask in the comment section of this particular video. I will check your comment and answer there. Okay. So this is all for today. Thank you all for joining the session, and take care. Good morning, everyone. Welcome to the official YouTube channel of Officer Sarah 24/7. How are you all? So let's start the session. But before starting the session, welcome to the channel. And if you are new to the session of Indian economy, Indian financial system, 50-day 50 classes, so I will let you know what actually we are doing in these sessions. So first of all, Monday to Friday, these sessions will be there on the same channel in the morning, 7:30 a.m. Apart from that, Saturday and Sunday, something special is going on in every Saturday, Sunday. What is that? I will be informing you all in the end of the session. But what we are going to do in this particular session, every day we are taking one chapter of your IFS. As you know, 45 units are there. And we have already covered your 23 units. Today we are going to cover 24th unit. And that comes another module C. So every day we are taking a particular chapter on which we are discussing a chapter in form of MCQ plus explanation of that particular, so that you will have the understanding what actually is going to be there in your paper when you are studying, or when you are studying your topic, you will be already knowing about it, what actually this topic talks about. Okay, so let's start the session. But before that, I am your mentor Amanjot Kaur for Indian economy, Indian financial system, as well as for PPP, principles and practices of banking. So as I've told you, there are total 45 units in this particular subject, and out of that 19 units are there in a module A and B that we have completed. We have started module C, and in module C we have already covered 23rd unit, and today we are going to cover the 24th unit, that is the microfinance institution. Now what is microfinance institution? Microfinance institutions are those institutions which are helping the financial systems to exchange the funds from the persons who have surplus of money and the persons who have deficit of money. So if you see the module C, it talks about what? It talks about the Indian financial architecture. So first, what we have understood in this particular unit, we have discussed what actually the financial system is. And all the rest units will be defining you the institutions, the mediators which are helping to the financial system to survive, like the banks. Banks are the mediator, which are exchanging funds among the persons who have surplus money and the persons who have deficit of. This is bank. Then banking laws, which are helping the banks to define what kind of services and in what condition, in what guidelines they can be allowed to provide these services. Then development financial institution, they are doing the same thing as a mediator. They are transferring fund to a particular sector of the economy to develop them. Microfinance institutions are doing same. NBFCs are doing same. Insurance companies are doing same. The regulators, RBI, SEBI, PF, RDA, Adda, they are also working for the same thing. And in these financial institutions, in these mediator, what have been changed? What are the reforms have been introduced, by which it become more better to provide the financial services or to manage the financial system of the country? That will be defined in unit 28. So you can simply see here, everything is available in this particular unit that helps the financial system to run. And today we are going to discuss the microfinance institution. So before understanding or before moving towards the question, let's first understand what are these. Before that, there are two terms. First is microcredit and the second one is microfinance. If I am talking about microcredit simply means a small loan, because credit means loan, credit means you are taking a funds. So microcredit means providing small loan services to the public. What does microfinance mean? Microfinance means the microcredit plus small savings, small investments, small insurance products, small pension products. It means microfinance will cover everything which is related to money, and microcredit will cover only the case of the loan. Clear? Now, if I talk about the microfinance, it covers your small loan. It means the money you are providing as a loan, but the small amount of money. Then second, small savings schemes will be available. Small savings product will be available. A small insurance product, small pension products will be available. So microcredit is a part of a microfinance which gives only loan, but the microfinance provide other services which are related. In addition to the microcredit, it provide other services. So this is the microfinance and microcredit. Now, what is microfinance institution? They are the mediators. They are the mediator which are helping us to deliver the financial services, to deliver the financial product, to fulfill the need of the credit, to fulfill the need of the savings and insurance and pension to the last person of the country. So they are helping the banking system, they are helping the other financial system also to perform this activity. Clear? So now let's start the microfinance institution. First question. So the first question is talking about, in which year did RBI introduce the lead bank scheme? In which particular year RBI introduced the lead bank scheme that we are talking about? Okay, so what is lead bank scheme? Let's first understand what is lead bank scheme. And the options you have is first 47, 69, 70 and 90. These are the options in front of you. Clear? These are the four options in front of you. Now, what is lead bank scheme? Lead bank scheme simply, first of all, it was introduced by RBI, and in this scheme, the fund district, the particular district will have one lead bank. Will have one lead bank. One district will have a one lead bank. And this lead bank can be formed to the public sector banks or the private sector. Either public sector bank or private sector bank will be formed as a lead bank in a particular district to promote that particular district. And what they are going to do after becoming a lead bank, first they have to do the branch planning, branch expansion planning. It means where it is required to open the branch of a bank. Okay, the district where there is less number of branches of a bank, because of that the customers are not getting the full services of financial needs or the financial services. So where it is required to open the branch, that will be planned. The second thing, they will plan the credit also. They will do the credit planning also. Like what kind of loan product can be introduced, what kind of credit facility should be in this particular district, that will be done by the bank scheme. Clear? So this is what we are talking about, lead bank scheme. So it is helping the financial inclusion as in the form of having a particular lead bank in the country in each district. Okay, and that district lead bank will be focusing on the branch expansion and credit plan. It was introduced in December, but in which year? In 1969. And the committee that have introduced this, that was the God-Gill committee, or you can call it a God-Gill study group. Right? You can call it a God-Gill study group or a God-Gill committee, both can be answered. The right answer here will be your 1960. The right answer is 1969, and all these are the detail about your lead bank scheme. So the right answer is B. Okay, December 1969. Now, microfinance consists of which of the following? So I have just answered this particular question here already. So let me know which of the following products will be the part of microfinance. So first we have micro savings, micro credit, micro insurance, micro pension, or all of the above. So I have told you microfinance simply means the financial services or money related services you are providing, but you are providing micro services now. So it will be micro savings, it will be micro insurance product, it will be micro pension, it will be micro credit. Micro credit means loan facility you are providing, small loans you are providing, that's a micro credit. All these will be the part of microfinance. All these are the part of microfinance. Okay, so the right answer will be all of the above. Right answer of yours is all of the above. Next. Which of the following types of microfinance institutions are regulated by RBI? So first of all, there are three types of microfinance institution, and out of those three, which will be regulated by RBI? So first of all, if I talk about banking institution or non-banking financial institution, they all are regulated by RBI in the end. So we know financial institutions, we are divided into two parts, that is banking institution and the non-banking financial institution. Banking institution, you all know that will be your all the types of banks in the country. They will be regulated by RBI. But the non-banking financial institution like the NBFCs, the primary dealer, the All India Financial Institution, they are also regulated by RBI. So they have been incorporated under the Companies Act or somehow, but in the end they have to follow RBI. So here the NBFC MFI will be regulated by RBI. Okay, NBFC MFI will be regulated by RBI here. So there are three types. First type is not for profit MFI. Second type is mutual benefit MFI. Third type is your NBFC MFI. So do remember there are three types, and out of these three, only NBFC MFI will be regulated by RBI. The right answer will be C option. Okay. Next question. Next question we have here. The Grameen Bank model was developed in which country? This was a very famous model. The Grameen Bank model was the very famous model of the which country, the question is asking. After seeing success of the Grameen Bank model, we have introduced the rural. We have introduced the microcredit facility. Because what have been seen, actually the countries are in front of you: India, Nepal, Sri Lanka and Bangladesh. And the right answer is Bangladesh. Now what used to happen in the Bangladesh? The money lenders, the sahukars, they used to exploit the persons who used to take loan from them. They used to charge a high rate of interest from them. And that's a kind of demerit. Na? So that's why the Grameen Bank model was introduced to safeguard these type of people from the money lenders, sahukar, etc. Okay, so this was the Bangladesh. Next. Which of the following are included in self-help group bank linkage program? So we have a certain options here. Out of that, you have to tell which of the following will be covered under the self-help group bank linkage model. And the options are in front of you. So first of all, what is self-help group? Self-help group is simply a group of 10 to 20 people. It can be all women, it can be women and men combined. Okay. Now maximum people understand by the name of self-help group, they always think so only it's a group of 10 to 20 women. No. Yes, it's true that government promotes more to the women's self-help group, but it's not like there is only women's self-help group in the country. It can be combined, male, female can be there. 10 to 20 people will be there. And the self-help groups was actually formed to promote the savings habit among the people. To promote the savings habit among the people, we have introduced the self-help groups. Clear? Now, apart from that, apart from all these things, one more important thing is there, that when we have introduced the self-help group, we wanted each and everyone to have a habit of savings. But apart from that, we wanted to fulfill their requirements of funding. So that they will be contributing a certain amount of money in a particular duration. And after that, whoever requires money, that money will be provided to that person. But before that, if I talk about, we have also provided the services of bank linkage. And this bank linkage program was actually recommended by SK Kalia committee. Okay. And after that, we have started providing loan facility to the self-help group. So which of the following are included in the self-help group bank linkage programs? It will be including opening savings account, lending to self-help group, opening current account. No. So right answer is all except C. So you are not providing current account services. As I have told you, the core function, the fundamental of the particular small self-help group is to promote savings, not the current account. You are providing loan, but you are not making them available the current account facility, because they are not capable of taking this facility. Now, they need money for the survival. Even for the survival, they need money. So how they can open the current account? So right answer is your all except C, D option. Okay. Now, acha. Now, as you remember, if you remember on the Telegram, I have shared something with you, like I am coming up with a very better thing for your JAIIB October exam. So we were thinking about hiding it from all of you and then reveal on the 9th of September. But as you know, if you have a certain secret, you have to make it out. So not full secret I will be revealing here, but yes, I want to tell you all that the JAIIB October 2023 very well planned by officers at a 24/7 team, and that will be revealed to all of you on this particular date, on this time. So the 9th of September, 8 p.m. will be a very important time for you. So do make sure have a notify me button on, because the session has been created, the event has been created. Just go to the event you will find in the comment section and click on that particular event and focus on what? That you also click the notify me button, because that will let you know when your event will be live. Okay, so 9th of September, 8 p.m. is the date you have to meet to know much more detail about this surprise. But trust me, this is the surprise for your JAIIB October 2023 paper that is definitely going to help you. Now, which of the following figures in the Fair Practice Code developed by RBI for NBFC MFI? The question is asking here, which of the following figures in the Fair Practice Code developed by RBI for non-banking financial companies, MFI. So FPIs, FPC have been created by RBI for the NBFC MFI. First, we have there should be board approved loan application format. Second, no security deposit should be taken from the borrower. Third, a borrower should not be member of more than one self-help group. And fourth, all of the above. So which of the following is a part of what? Which of the following is a part of your fair practice code developed by RBI for the NBFC MFIs? And the right answer is all of the above. They all are going to help under the NBFC MFIs. So this fair practice code has been given by RBI that have to be followed by them, provide the better services to the customer. Right answer is D. Now, mark the correct statement in relation to the concept of microfinance. In relation to the concept of microfinance, which of the following is correct statement that you have to tell? And we have three statements in front of us. First is saying microfinance is a form of financial services which provide small loan. This is correct. Other financial services to the poor and the people above poverty line. So below poverty line people are the weaker section. They are the economically weak society of our country, the disadvantaged population of our country, we can say. And also first option is saying that microfinance provide funding facility, small loan facility and other financial services like the small saving, insurance, pension, etc. to the below poverty line as well as above poverty line population. Second is saying it is economic tool designed to promote financial inclusion which enable the poor and low income household to come out of the poverty, increase their income level and improve their overall living standard. Third is saying microfinance consists of micro savings, micro credit, micro insurance and micro promotion. So what do you think which of the following is? What do you think which of the following is? So the right answer here will be, if you see here, the first option is saying it will provide to the poor and above. No. Above poverty line will be having a lot of services with the bank. They do not have to have a microfinance. They are already the above poverty line population. Then second is almost already covered, or I can say it is 100% correct about your economic tool to promote the financial inclusion in the country, enable the poor and low income household to come out of the poverty and also increase their income level. Achha, on the basis of income level, the micro loan will be provided to the people. And what is that income level? I will let you know in the end of the session because one more question is there about the same topic. Okay, now next. Microfinance consists of micro savings, correct, micro credit, correct, micro insurance, correct, but what about micro promotion? No. So the only correct statement is second option. It means the right option will be C. The right option will be your C option. Clear? C option. Next. Which of the following is correct definition of microfinance loans? Which of the following is correct definition of microfinance loan? And in this particular question, you will understand what is the income limit is required to get the microfinance. So first is saying microfinance loan is defined as a collateral-free loan given to a household having the annual household income up to 3 lakh. Okay. Second, up to 5 lakh. Third, up to 1 lakh or none of the above. So what do you think? Which of the following is correct? So two things are covered and they are correct, that it will be provided as a collateral-free loan. It means no security, no collateral is required here. And the second is also correct. It will be provided to the household. But at what annual household income it will be provided? A, B, C or D? So the right answer here will be A option. Up to 3 lakh annual household income will be there. Then the microfinance loan will be provided to them. Okay, so right answer is A option. Next, which of the following is our key recommendations of the Maligram Committee? Okay, so which of the following are the key recommendation of the Maligram Committee? And these are the options we have. First, we have here criteria for defining microfinance loans that is classified as qualifying asset. Second, transparency in interest charges as well as other terms and conditions of the loan. Third, prudential norms on capital adequacy and provisioning requirements of the bank. Fourth, prescriptions related to pricing of credit terms of a margin cap and interest rate ceiling on individual. So this Maligam committee was formed by RBI. It was formed by whom? RBI. And this committee has given a certain recommendation to us. And which of the following is the key recommendation of this committee? And the right answer is all are the recommendation. All recommendation has been given by this committee. This committee actually have given around 7 to 8 recommendations to make the banking system, financial system more proper. But here we have 4 statements. So all are the covered under Maligam committee. Right answer is D. Next we have which of the following are correct about self-help group bank linkage program models. Right, next question is which of the following are correct about self-help group bank linkage program models. So we have these 3 models. First model, model 1, model 2, model 3. There are actually 3 models only. Okay. The model 1 is NABARD bank and self-help group will be involved. Model 2 is saying NABARD bank, self-help group will be involved, but apart from that, NGO will be involved as a facilitating agency in the model. Okay, NGO will be involved as a facilitating agency in the model 2. Model 3 says NABARD bank, NGO, self-help group will be there. Here the NGO will be involved as what? As the financial intermediary. You can see it is under the model that is NABARD bank, NGO, self-help group model it is. So here NGO is not only a facilitating agency, no, it is working as a financial intermediary. So what do you think which of the following is correct? So the right answer here will be all are correct. Model 1 will not have NGO, Model 2 will have NGO but as a facilitating agency. Model 3 will also have NGO but as a financial intermediary. Do remember these are the 3 models under the self-help group bank linkage program model. Okay, do remember them. The right answer will be your D option. Okay. Now, as I have told you, microfinance institution have 3 types and self-help group bank linkage models have 3 types. Okay, so do remember that, that is very important. So we have a microfinance entities here. So microfinance entities will be in the 2 forms, that is informal sector and formal sector. Informal sector, you all know the type of a sector where is no regulations and regulatory bodies there. Formal section, proper regulation guidelines standard will be given. Sorry. In the informal, you will find money lenders, mahajans, shops and your landowners. They do not have any kind of guidelines. They do not have any standard way to provide the financial services. But when we talk about informal sectors, when we talk about formal sector, we have banks. Then we have self-help group bank linkage, which have 3 model 1, 2 and 3. Then we have microfinance institution. There are 3 types: not-for-profit microfinance institution, mutual benefit microfinance institution, NBFC's microfinance institution, and they are regulated by RBI. Okay, so this flow chart is very important. Do remember. Okay, so these are the discussion we have done on your microfinance institution unit, module C, unit 20. Okay, now let's know how many answers you guys have given. Let me know how many answers you guys have given here. Correct. And also if you are watching recorded session, do let me know in the comment section after you covered the recording of the session that how many scores you have got. So drop a message there. Okay. Now apart from that, as you know, if you have seen the May 2023 paper analysis, if you have done, you have seen or you should know till now that the paper was in very comprehensive way. Covering the MCQ only is not going to help you. It is going to help you to revise the content. It is going to help you in memorizing the content and to know how much better you are performing in the paper of or in the subject of yours. So how to cover the whole detailed analysis of the subject? For that, first of all, you have to download the Adda 24/7 application. Do download the application because here you will find 1% additional discount also. So just go to the application. After going to the application, you have to click on the JAIIB CIB section. So you will find JAIIB CIB section, click on that, and you will find here JAIIB October 2020. Click on here. You will find the Mahapack and the batches, so everything is available here. Now, when it comes to the Mahapack 2.0, when it comes to the Mahapack 2.0, it is covering everything. And because we all are celebrating Janmashtami festivals, first of all, a happy Janmashtami to all of you. So we are having a 81% discount here with the double validity on the Mahapack 2.0. So how to enroll? Enrollment process is same for any particular batch. Just click on the particular batch, do read the details, check the offerings here, what this particular product is offering you. So check the offerings here and then decide the validity you want to go with. 3 months validity, 6 plus 6 month validity, 12 plus 12 month validity. Decide the validity. After deciding the validity, click on the buy now option. And after clicking on the buy now option, you have to use a code that is Kanha80. Because this code is going to provide you 80% discount here. Okay, if you want 1% additional discount, then use the coins which are available on the application and you will get 1% discount here. And this is for 6 plus 6 months. It means the double validity is available on this product. That is 6 plus 6 month validity. Okay, and the same process will be there. By using the same code Kanha80, you can purchase the individual batch also. And let's say if you find any kind of problem at the time of enrollment, you can call on this number and ask your query. Okay, so this is the information for all of you. Apart from that, what about Saturday, Sunday? So I have told you Monday to Friday we are going to meet in the morning 7 a.m. for PPP and morning 7:30 a.m. for Indian economy and financial system. On Saturday, you will have your weekly revision sessions, and on Sunday, you will have special sessions like 50-minute 50 questions. Apart from that, master class, or you can have the rapid fire session. All these will be available on Sunday. And to join all these sessions, to watch all these sessions, first you have to subscribe the channel Offices at 27. Also press the bell icon here so that all the upcoming sessions notification and all the sessions which already have been done on the channel. From where to find? Just go to the playlist and you will find all the sessions which have been completed. The recording is properly available in the playlist. Okay, so this is the information for all of you. Also, if you have any kind of doubt about the topic or any kind of doubt you are facing while preparing for JAIIB, you can ask in the comment section. I will be checking your comment and answer. Okay, so let's end the session. Have a very good day, everyone. Take care and do not forget to subscribe this session. Subscribe the channel as well as share the session. So thank you, everyone. Have a good day.